Blind taste tests prove it. Tabasco Salsa Picante wins. The superior Mexican-style hot sauce.
Panera Bread is hoping better food and service will help it rise again. Hello, and welcome to The Week in Restaurants. Look at the biggest developments in the industry over the past 7 days from the editors of Restaurant Business. I'm Joe Guszkowski, senior editor of RB. I'm here with executive editor Lisa Jennings. We'll tell you more about Panera in a second. We'll also be talking about the latest on the Cracker Barrel logo fallout, as well as a protein-packed new menu item from Sweetgreen. Then later on Tech Check, I'll talk about how restaurants can strike the right tone on AI. But first, Panera. Lisa, they're officially in turnaround mode. Tell us what happened.
Yes, they're officially in turnaround mode still. It's kind of been going on for a while. But so Panera's CEO, Paul Carbone, this week revealed kind of a long-awaited plan for the transformation of the fast casual brand. They're calling it Panera Rise. You get it? It's a bread reference.
Smart.
Yes. And so they've been in transformation mode for about 3 years now, though. So this is not like it's the first time they're really trying to transform. But last year, they overhauled the menu. The chain went through the long process of closing its bread baking facilities to shift to a par-baked bread made by a third party. And these were massive operational changes for the brand. Meanwhile, now Carbone is saying that the chain hasn't been focused enough on food and experience, that being what really defines what a restaurant is. And so this new Panera Rise plan is designed to do that. And it's a 4-pronged strategy. And the first prong is going to be working on the menu, which they have been doing, but they're going to continue to do. So Carbone says Panera's food has lost its distinctiveness. And he talked about things like how the salads had been made with romaine and iceberg lettuce and, in a move to cut costs, perhaps. And now they're going to go back to all romaine, just as one example of kind of improving the quality of some of the dishes. And he was saying that they didn't do enough to test menu items. The changes they made last year, they really sort of focused on the core sandwich, soup, bread, salads. That was the core menu. And they eliminated a lot of things and they focused a lot on macaroni and cheese and things like that. They tried things like flatbreads that didn't really work. Those didn't work for delivery, for example. And they cut a lot of the beverages. And so, Panera beverages, were at one point kind of a big strength for Panera. They had that they still have the unlimited sip club, which you can buy all sorts of drinks for a certain price for a subscription. But they also had some issues last year, you might recall, with some lawsuits that alleged that people were harmed by their charged lemonades. They were, caffeinated drinks, highly caffeinated. Those are off the menu now, and Panera is trying again with some new energy drinks that are lower in caffeine, but they're popular. And so, and they're also trying things like refreshers and frescas. So beverages is going to be a real point of the menu that they're going to be looking at trying to improve. And of course, that's true across the industry. Beverages are huge right now. So the second pillar is value. They're going to be, and that's an issue all restaurants are dealing with, and particularly in fast casual. So that's going to be interesting to see what they do with that. And they're putting more workers into the cafes. Carbone was saying that people would walk into a Panera, they wouldn't see anybody in the front of house. And that was hurting the experience. And also, I would argue, the perception of value probably. And so they're going to be putting more workers, more people, back into the cafes. That it's about 2,200 units and about half are company owned. So this is, really going to be impacting more, their own operations. Now, Panera is owned by a Luxembourg-based JAB Holding. And it's a division that they put Panera in a division with Caribou Coffee and Einstein Brothers, and there has been talk over the years about an IPO, and that didn't happen, largely probably because of Panera having to deal with some of these declining sales. Sales were down 5% last year. And Carbone wants to get growth going again. That's the fourth pillar. But, fast casual as a category is suffering in this economic uncertainty. It's increasingly hitting the middle class, and particularly younger diners. And in a world where there's just so much more competition in the bakery cafe space specifically, it's going to be a real challenge for Panera to kind of get its mojo back. So what do you think, Joe, as a member of the younger clientele that they're probably going for right now? What do you think?
Well, I think you can't go wrong investing in food and experience. And I think it's what we've seen a lot of brands in turnaround situations do. I'm a little surprised it took Panera this long to figure that out. That, they spent a few years, it seems, cutting things out of their operations, cutting corners, perhaps, where, in this environment, you kind of have to do the opposite if you want to stand out. It's just so competitive. everyone is investing in, it seems, quality and experience. And for Panera to win, it's going to have to do that, I would think. Fast casual, like you mentioned, is struggling, but maybe there's, an opportunity there for them to win back some share that they've lost. It'll be interesting. It's been, kind of a very rough period for them over the past few years. A lot of change, a lot of leadership change, but this to me seems like the most deliberate step and the biggest maybe investment they've made in this stretch. So hopefully they can make it work.
Yeah, it really will be interesting to see what they can do to stand out. I mean, fundamentally, that's what it's going to mean. And I feel like Panera at its peak really was something different in fast casual. There wasn't really anybody else out there, any other brand challenging what they did. But now there's so much more to choose from in fast casual. I mean, the space itself has grown. And as we know, consumers are getting very choosy about where they're dining out. They don't have a lot of money to spend. And so they really are, making some choices that are clear. So let's see what they do. It'll be interesting. And, hopefully they can get things turned around. And speaking of turnarounds, Joe, you this week have been reporting on another brand that's been really struggling with a turnaround. Tell me about what's happened with Cracker Barrel.
Yes. So today, this is Thursday, we're recording this. Cracker Barrel had a closely watched shareholder vote, their re-election of their board and some other initiatives that they've put forward. And, they've been in the middle of this fight with an activist shareholder, Sardar Biglari, who has seized upon their recent issues with their logo rebrand to call for changes at the chain. So he was asking shareholders to oust the CEO, Julie Masino, as well as another board member, Gilbert Davia, who has sort of been a target for a lot of the issues that Cracker Barrel has been having. So what happened today was the shareholders did vote to not reelect Davila, and he resigned after this preliminary vote came out. So a bit of a win for Biglari, who has been fighting with Cracker Barrel for 15 years with not much success. He keeps putting them through these proxy battles. Shareholders haven't really stepped up to support him over that time, but they did back him here. However, they voted to reelect Masino, and they backed all of the company's other initiatives, some of which included bylaws that are actually designed specifically to make it harder for Biglari to continue lodging these proxy fights that are really costly and distracting, and that he never wins. An interesting moment. I mean, in some sense, it's a referendum on the logo situation, as shareholders saying, we didn't like the way this unfolded. Davila is bearing the brunt of this. He seems to have been involved at some level in the rebrand effort. He was a marketing specialist on the board, but it's unclear, how much, if he came up with the idea for the logo, or it's hard to say how much responsibility he actually had, but he's bearing the brunt of it and is gone, and the board will go down to 9 members. At the same time, the re-election of Masino is an endorsement of her turnaround plan, which had been working well before the logo came out. So they're saying, we want you to forge ahead despite the losses that the stock has taken and the struggles that the brand has had, the restaurants have had since that. So a bit of a mixed, story there, but notable nonetheless. And I'm sure there will be more in the future as Cracker Barrel tries to dig out of this hole.
That's so interesting. We don't often get to see, the drama that goes on in boardrooms, when this one has been so public, thanks to Sardar Biglari in part, but also with it becoming such a political issue. I'm happy to see that Masino was supported and that she'll stick with it. And I think she had some good ideas. That it's going to be interesting to see how that plays out now, perhaps as they get past some of the bot driven, as you have reported, public response to what was attempted.
Yeah. It's unfortunate that this one little thing, this new logo, caused such problems for Cracker Barrel because the other things that Masino and the brand had been doing were working. And then this has sort of set them back artificially, I would say. I don't think they did anything wrong with the logo. It was just blew up in their faces for a number of reasons, including, like you said, the bot-driven campaign, which we've written about. Lisa, we got to talk about this Sweetgreen protein bowl. This made a lot of headlines this week. It had us talking. What's in this new bowl, and what's Sweetgreen trying to do here?
Well, I know we've been talking a lot about Sweetgreen in the news, but Sweetgreen is still making news. So, I mean, it just keeps going. So this week, Sweetgreen rolled out what they call their Power Max Protein Bowl. It's an LTO. It has 106 grams of protein. So this comes, as the chain has been really leaning into this protein craze. They've been dealing with, slumping sales and they had a really difficult third quarter. Their traffic was down more than 11% traffic and mix. They're talking about how to try to turn things around. So they're really jumping on protein. That's what they feel like their consumers want. They've increased the amount of chicken and tofu in their bowls by 25%, which is also an attempt to kind of improve their perception of value. And last week, they rolled out a macro tracker tool on their website and app. So when you order your meals, any bowl or plate, you can maximize the protein by, seeing in real time what adding certain ingredients does, along with other nutrients. But they really feel like people are looking for protein right now. So apparently they really believe that it's more than just the gym bros now, like yourself, Joe, who are going to the gym and pounding down as much protein after leg day or shredding or whatever it is that weightlifters do. They really feel that lots of people are going to be looking for ways to add more protein to their diets. And so this bowl, 106 grams of protein. It also has 1,120 calories, which is like half of your day's, most people's recommended calories. But most importantly, it's $22.45. So this is by far the most expensive thing on the menu. Most bowls are under 17. And, people have always said that Sweetgreen has the $20 bowls, but this one really is $20 and plus. So when after taxes and delivery and all that, imagine it must be like a $30 bowl. So value has been a real challenge for Sweetgreen, and they've talked a lot about that in the third quarter. The CEO has been talking about rethinking their pricing strategy, perhaps getting more entry points to the menu, some lower points that might bring people in. They're talking about a handheld that I'm guessing will be less expensive than their bowls. And now they introduce a $22 bowl. So, I mean, to me, what's so interesting about this to watch is that whether people will go for this high protein thing, if they go for the high protein aspect of this bowl, despite the price, that really does, I think that will say something about the way consumers are behaving these days. What do you think, Joe?
I don't know what to think, Lisa, because like you just outlined, it's dissonant because it's, on the one hand, they're clearly going after this protein trend, which we've seen elsewhere, Starbucks doing protein drinks, et cetera. It's a big trend right now, but at a very premium price point that goes against everything the consumer seems to be asking for, the average consumer. So it's kind of a niche item for a very targeted audience that will find value in it. But for the average customer on their lunch break, I don't know if it's really going to move the needle, and it's creating headlines that are like, so Sweetgreen's raising prices. They're offering more expensive food, not less. So yeah, it'll be interesting to see if it works or whether it really moves the needle at all, given that it seems to be kind of a smaller audience that they're going after, versus something like a value meal combo that's going to be widely popular. I would just note, just to put that into perspective, someone tweeted at me that like a Little Caesars pepperoni pizza has about the same amount of protein as that bowl, for whatever that's worth.
Interesting. Yeah.
But I really had no perspective on how much protein 106 grams is, but it's a whole pizza, I guess. So for whatever that's worth. Okay, folks, that'll do it for this portion of the Week in Restaurants. Next up, we're talking AI on Tech Check right after a word from our sponsors.
Blind taste tests prove it. Tabasco Salsa Picante wins. The superior Mexican-style hot sauce.
Hello, and welcome to Tech Check, where I, Joe Guszkowski, talk really fast about one big topic in restaurant tech. This week, is there a right way for restaurants to talk about AI? As we know, many restaurants have been jumping on the AI train despite the fact that consumers have decidedly mixed feelings on the technology. According to a recent Pew study, more than half of Americans are concerned about the use of AI. So is there anything restaurants can do to ease those concerns? A company called Maps Insights has looked into this question across a wide range of industries and has drawn some conclusions about how corporations can communicate how they're using AI responsibly. For restaurants, this includes focusing on how AI will benefit customers and how it will help employees rather than replace them. Notably, Maps found restaurant brands that have been good at this have highlighted that the AI they're using still has human backup if something goes wrong. Overall, Maps found that the largest restaurant brands have a generally good reputation when it comes to AI, but it noted that could change as it becomes more widely used in our industry. That was the Week in Restaurants podcast from Restaurant Business. Be sure to subscribe to the Week in Restaurants on Apple Podcasts, Spotify, or wherever you get your podcasts. Before we let you go, a quick programming note. There will be no episode next week due to Thanksgiving. So we hope you all have a great holiday weekend, and we'll talk to you again on the other side. This has been Joe Guszkowski and Lisa Jennings from Restaurant Business. Thank you for listening.
Blind taste tests prove it. Tabasco Salsa Picante wins. The superior Mexican-style hot sauce.